We see Australian Finance Group, AFG, is also offering above average, medium and longer term growth prospects. That might surprise some investors because of course their main game is in the housing market, and the popular consensus is that housing is post-peak or ex-growth. But we see some really nice drivers there. The first of these is that mortgage brokers themselves now writing 53% of all home loans in Australia. And we see that as going through 60% over the next couple of years because it's a win-win. Investors win or borrowers win as they get a mortgage broker looking at a large number of products across a large number of providers and providing independent advice, and then of course helping with the paperwork. The banks also surprisingly win because for them it's a variable cost and it's much more flexible. They can dial the loans up and down depending on any constraints APRA is putting on them, depending on their own internal requirements. The second thing that's really driving that market, of course, is that there's a push for independent brokers to also join some of the larger groups. So not just AFG, but also Mortgage Choice and some of the more dynamic growing groups such as VOW and Yellow Brick Road. And this is being driven by compliance and the additional services they can provide. And the third thing driving AFG's profits is the white labels. They're a little bit late to the party on this, but they're now working solidly to take that huge distribution platform they have and start to market a white label product into them. I've got 5 really good offerings at the moment. This of course provides a higher margin to them, and that falls straight through the bottom line without any additional costs involved. The company's recently upgraded its earnings by about 13%, and if you add on the additional trail book they'll get, it's about a 27% growth in earnings per share. We're forecasting a 7.5% fully franked yield, and with 85 million surplus cash in the balance sheet, there's a fair bit there to be able to pay out the dividends, look at organic growth and also M&A if that should occur. I think just finally it's important to mention that AFG has been around since 1994 as a private company, so it's got over 20 years as a private entity of strong earnings growth, and then since May 2015 it's grown earnings of more than 40% in the public arena. So it's a really good long-term track record for management to hang their hat on.